All right. Good afternoon, everyone. Hope you guys are doing well. It is Friday, May the 10th. All right. May the 10th, 4 o'clock here, recording after the market close. Great week for the index, green on the week. Last 3 weeks, we saw gains from the on the S&P 500 index. So nothing too bearish, but here we go. I mean, CPI data coming out next week. We'll talk about that. But the only big news this week was the jobless claims. Unfortunately, it was a lot of chop, a lot of sideways action, but the index still gained a lot this week. To be exact, over about 70, 80 points, but over 170 points on the index since NFP came out last Friday morning, and that's where we gapped up. If you remember, all right, go refresh your memory real quick. This was Thursday before NFP reading, and we closed that day at 50.64 range, and we gapped up, left that gap here. All right, and went up to 51.28, and we just ended the week at 52.20, 52.20 range, which is pretty good. I mean, considering all things considered, with all the doom and gloom around the market since the market hit its lows, the market closed green today at 5222, which is pretty much a flat day and a doji day to be exact. But you still got two gaps left below. If we go ahead and look at the SPY real quick, we know that there is a 512 gap. All right, 512 was all the way down here from last week. After Tuesday, the market gapped up, right? And then this was Friday. Sorry, Monday we gapped up. Tuesday, consolidation day, and another move forward. And we saw highs on the week at 522 on the Friday. And I still think that this market does still have a little bit of room left. Unfortunately, the interesting thing is the market's actually starting to run into a major event. That's going to be the CPI coming up in about the next 3 days or so. Mind you that this PPI is going to drop on Tuesday, and then CPI on Wednesday. Powell will also speak next Tuesday morning, so right after PPI as well. So going over to my upside target. Well, before I go there, real quick, real quick commentary regarding the jobless claims. So we know the NFP was really soft. All right, jobless claims came out 231,000 initial jobless claims, 231,000, and the expectation was 212. So that's way more hotter than expected. So you are starting to see the cracks in the labor market, and Powell said the same thing. If there is softening in the labor market, we're starting to see cracks, they may cut interest rates a little bit more or faster. Now, the market has started this year pricing in 4 rate cuts, all right? And we're back on the table, possibly pricing in 3 rate cuts starting in September, November, and December. That's where the market is actually looking at 3 consecutive rate cuts potentially over the next over those months. But it's going to come down to the CPI data and the PCE and all that in the next several months. But as far as the rate of inflation or rate of change on inflation, it is coming down. It's just a little bit stickier than the Feds like. And of course, we saw a lot of Fed speakers speak about the inflation this week. Particular Kashkari, who always kind of sounds hawkish. I believe Bowman also said today that a rate cut is not warranted this year. So the market is really, really choppy today. So that's what's happening with the jobless claims. That was pretty much the biggest part of the week, and we saw a great move on Thursday morning from that data. All right. So other data going into next week. All right. So nothing much on Monday, but Jefferson, Messer on Monday, Tuesday, PPI, Cook on Tuesday, Powell, 10 a.m. You want to mark that on your calendar, 10 a.m. on Tuesday. And then Wednesday, CPI. And after that, things calm down. So we got jobless, and of course, on Thursday, and then Friday, Waller, and that should wrap up the week next week. So pretty important week as we head into it. And my commentary on the CPI. So we'll go take a look at the Cleveland website. This is always my go-to source. All right. So number one, they're expecting CPI month over month 0.41, 0.31. All right. And 3.5 headline CPI and 3.65 core CPI. Now, if you remember, the last reading that we had on core CPI was 3.8%. So they are expecting a softer core inflation. And in addition to that, they are expecting that the CPI month over month comes down to 0.3. expectation. All right. And I don't know what the expectation is, but the previous reading was 3.5 on the headline CPI. And I think that's going to come in line. But I think the bigger component is watching the core year over year number. And I think that's going to come down lower. And Cleveland is expecting 3.6. So if that's true, then I think the market does rally. And I think that if there are going to be dips on Monday, it's buyable leading up to the event. Now, keep in mind, once again, PPI comes out on Tuesday ahead of CPI. All right, so I'm going to give you my upside targets going into next week. Number one, I'm going to say the upside on positive CPI. All right, good for the market, good reaction, softer core. All right, CPI, inline headline CPI. We should most likely visit 526, which is the all-time high on the index, on SPY anyway. All right. The all-time high on SPX is actually 5264. So that's where I'm pricing in, where I'm thinking we're going to go. But we should see some type of move down on Monday. This is why I'm hedging some puts over the weekend. Probably a nice move to 518, 517 should be the low of the week. So you got a daily FEG that I'm looking at here, and they're probably going to dig right into it. Possibly Monday morning to kind of start scaring people out. We may even go a little bit lower, but I'm going to put my downside target at 517 to 518 with the upside target of 526. Listen, folks, we are actually above that trend line, number one. Popping over this trend line was kind of marked the bottom for now, all right? And actually closing above this trend line today, you saw a lot of choppy action today, all to, bulls and bears fighting over that trend line, and the market actually ended up closing above it anyways, so it's not bad, all right? And we're still above the 5-day moving average. Same thing with the Q here, all right? With the Q, we're closed above the 5-day moving average. Certainly, it's a little bit choppy, kind of like, what we saw the action was on Tuesday this week, just a simple little doji on the index. Very, very low volume today, low volume chop. And that's been the story of the week. The most of the market is taken off because there's just no data, right? So very low volume week, and very, it's just a little bland, right? But quickly, just to remind you too, the MACD has flipped green, all right? And this is the same likely scenario back over here on a major low. Am I saying we're going to like 600 SPY? No, not necessarily, but you get the point that there is still momentum in this run. All right. So going over to the 1 hour chart, and this has been our guiding light this week, right? And we started this week saying, all right, we got to get over this trend line, number one. And number two, if we go higher, then there it is, 522.56. So we actually did break out of this trend line, and we tested that trend line pretty much all day today. We tested this trend line, and that's it. That's all we get. All right. So the market is still holding up pretty well. It just doesn't seem like it, right? It doesn't seem like it because it's going sideways and it's burning their premiums and all that. But it's actually fair, did pretty well. All right. So holding above that trend line is key, even though if it kind of wicks below, every time it wicked below, you can see on the hourly chart here, it actually made higher lows and higher highs. I know it doesn't seem like it, but that's pretty much today. All right, breaking below that, yeah, we're going to see that 518 mark or 518. This area here, right, was a major resistance on, I believe, Tuesday, right? Tuesday we hit 518. We dropped down to 515 overnight and just to come right back up. So if you think about it, I mean, we went to 522, we dropped to 518. Not a big deal, right? It's not bearish. It's just market taking a little a break. So here's a scenario for next week that I'm thinking of. If we end up around 518, 517 on Monday, then so be it. Okay. So that's going to be kind of the low of the week, 517 to 518. If that's the case, then it's a pre-CPI fear. If it's a pre-CPI fear, we buy the fear. All right. And that's also where your 5 daily moving average is. Your softer CPIs since all-time high 525, 526. And ladies and gentlemen, there is a 30-minute trend line that leads us to 530 on the spot. So there you have it. So that's the plan going into next week. Real quick around the block, on the other text that I generally cover. I'm going to go on the weekly on the Apple, guys. This looks pretty good. It is very, very tough to trade Apple. I'll tell you that, even for me. But this was a clear breakout out of this resistance zone and a clear retest of that resistance zone. Okay. which now becomes support. All right. So keep an eye on Apple. All right. I think Apple's in a very, very nice uptrend. I'm holding Google overnight. All right. Google simply had a, kind of a doji on the week. Now, the thing about Google was that it got down this morning because OpenAI was supposedly launching some type of OpenAI search engine, all right, or Chat GPT engine. And then he tweeted in the middle today that, well, it's not a search engine. So Google recovered. Let's just leave that alone. All right. Yes, I had calls on Google, but I still like Google on the 4-hour chart because Google 4-hour chart indicates that it can actually hit this trend line at 178. So I'm going to be watching out for that. All right. So that's Google. Amazon actually did, pretty well today, this week. Given everything. But it ended up just kind of like shorting just shorted the all-time high. So Google, Amazon hit an all-time high and pulled back. All right. Fair enough. But you look at the daily chart. It's a nice, beautiful cup and handle breakout, and it probably has to retest this trend line, guys, on the daily, probably 184 or something like that, and then bounce off of that. So Amazon, nothing too bearish here. All right. Taking a look at NVIDIA actually kind of an ugly day, kind of, short, stopped short of the 5-day moving average. Nothing too bad here. Kind of looks like a cup and handle actually on NVIDIA. Oh, this is a cup and handle possibly on NVIDIA. There you go. So you went from so this was 907 was a big spot, right? And we ended up at 920 this week. All right, went a little higher, and now you got a potential cup and handle action going. So nothing too, like I said, I know that tech stocks look weak over the last couple of days, but it actually did very well over the last 2 weeks. So QQQ went from like 420 to 420 or to 444 to the highs today, and it's time to just giving back some. But that's actually a beautiful cup and handle structure on NVIDIA. All right, so those are the things that we'll be watching next week. Ladies and gentlemen, have a great weekend, and we'll see you back on Monday.